Thank you for visiting the Coin Lady channel again. As of right now, the price of Ethereum is $3,466, down approximately 2%, while Bitcoin is down roughly 3.3%. And as expected, XRP isn't one to pass up a decent pullback. With a price of 55 cents, down 3% on the day, everyone is asking, is this simply a healthy pullback? Or will this only bring us more misery when I tell you? I do not do fortune telling. During this first quarter of the year, I'm paying close attention to if any unexpected problems arise in the banking sector, the commercial real estate market, or any other area. There will likely be a bit of a dip in the crypto market for the time being, but as April rolls around, people will try to get ahead of the halvening event. I don't know what else to tell you, but interest rates were high at the beginning of the year and could begin to fall. The level remains high. There is some uncertainty in the air. Most people have taken a little more abuse than they'd like to acknowledge. In addition, we may face some pressure at the beginning of this year. Many have speculated that the bull run has begun and that we are already in an uptrend. Perhaps it will begin if you take a broad view, but you can find polka dots for less than $7.55 penny. XRP, not a very high Cardano price. Atom and $10. Before we can declare a runaway bull run, I believe we need to finish out this task. In the near future, at least, things are going to get ugly, but in the long run, I'm hoping to gain some valuable insight, and we're currently in a bit of a holding pattern. Brad today, Garland House responded to Jamie Dimon of JP Morgan. Articles published by You Today state Brad Garland House, CEO of Ripple, recently spoke on the huge implications of approving a Bitcoin ETF in an interview. So many people are claiming this burger is terrible or doesn't amount to anything, so we're going to investigate it. We will delve a bit further into my belief that it is actually the inverse. But according to Brad, this is major. Additionally, he addressed Jamie Dimon's, CEO of JP Morgan, worries about the cryptocurrency market as a whole. Moreover, prior to deconstructing Brad's statements here. However, what I can tell you is that if you are somewhat older, as I am, you have been through something similar previously. If you recall the internet, we considered many of these businesses. Well, that's just digital, we thought. There's an online version. Why is it valuable? Reminds me of the time when MySpace was sold for 4 or 500 million. Do you think I'm crazy? That amount of money seems excessive for what is essentially a website in the mental arena. We still have a ways to go before we can fully comprehend the magnitude of these web-based firms, despite their immense value. There is, however, substance to it. It need not be a business if it creates value, even if it is entirely digital. Assuming it contributes to a better world. There will be significant, tangible effects even if it's virtual. Brad continued by saying that new technologies, such as crypto, may be attractive to evil actors, but that we shouldn't ignore their substantial benefits just because. Enemies will perpetually employ a fresh method. We will not, therefore, declare that we must eliminate email, cell phones, or anything else that thieves find useful. They do evil with instruments that may be good. Just as we use practical tools to run our company. He brought up the fact that anonymous transactions are not supported by Ripple and that the platform only works with regulated financial institutions. Trust me when I say that anonymous transactions are perfectly acceptable. I am not committing a criminal just because I desire privacy. Here at Garland House, we take pride in the recent approval of spot Bitcoin ETFs by the SEC and see it as a huge validation for the cryptocurrency sector. However, the government will inevitably try to argue that people shouldn't have privacy and that we should be able to see everything. So, this is just another thing we'll have to fight about. This is monumental. People on times don't get wealthy suddenly. They fail to perceive the broader context and dismiss it as insignificant. Do nothing, just wait. You're going to be amazed by its size. Along with Bitcoin, it will have far-reaching consequences. Our next piece is from of ZY Crypto. Pitch XRP Ledger to $1.6 trillion asset manager was the title. As the traditional financial powerhouse Franklin Templeton is making more and more of a beeline for the cryptocurrency market, Ripple's chief tech officer David Schwartz has, in what I find to be a hilarious turn of events, sold Franklin Templeton on the benefits of the XRP ledger. The small mascot with the laser eyes belonged to Franklin Templeton, which I noticed. I never imagined I'd see that. We are continuing to fund, monitor, and develop these networks as they grow and mature, according to Franklin Templeton, who claimed that other layer 1s outside of Bitcoin, such as Ethereum and Solana, have huge potential. David Schwartz responded by saying the following, stressing the capacity, the XRP, what is it? The ledger? Among the many benefits of the XRP ledger that Schwartz, a key architect of the project, emphasized was its stability and durability, especially in the face of millions of transactions successfully processed over a decade. The power of XRP and tokenization in the exchange of crypto assets for real-world assets are further emphasized by him. I think the XRP ledger has a lot of potential. It's unique among blockchains as it doesn't rely on proof of work. Evidentiary support is lacking. There are benefits to that, in my opinion. The XRP ledger isn't able to perform everything that Ethereum, Cardano, and Solana can, but it's quite good at what it can do and can grow very well. I believe XRP will play a role, and I believe it will be a game changer going ahead due to its built-in tokenization function and decentralized exchange, rather than being an additional software on top. Things like these are causing a lot of anxiety. So, is an XRP ETF in the works? Sure. Eventually, every big cryptocurrency will have its own exchange-traded fund. Ever since its inception more than 10 years ago, XRP has maintained its position as one of the world's most actively traded cryptocurrencies. The courts have even recognized it as a commodity. Though it won't happen tomorrow, the XRP shirt will be available at some point. Even though there probably wouldn't be enough demand if it did, we're going to keep building, and one day there will be an XRP ETF. Forget about adding Bozo coin number 5000 to it. Although your current players may have snatched up a plethora of investment opportunities, your major players will gain access to traditional finance. The Ripple court case laid the groundwork, demonstrating that XRP and other crypto assets are commodities rather than securities. Additionally, this was the first instance where an individual went to great lengths to obtain a definitive verdict from the SEC within a library. The judge's words couldn't have been more cryptic. Regardless of how thin the Ripple is, this was a very obvious secondary market trade. The two most consequential court cases in cryptocurrency history, in my opinion, did not begin with XRP. XRP is not a security in and of itself. Before Coinbase and Binance finish up, various crypto asset trading, staking, and other exchange-based activities will be examined to determine the true state of the law regarding crypto transactions. Anyone can take it. The judge in the case of SEC versus Nance will now hear arguments regarding the classification of cryptocurrency as a security. When it comes to questions of digital asset protection, perpetuity, and staking, the U.S. legal team representing Nance will have the last say. Major decisions will be reached after they have reviewed all these topics. If Coinbase wins and Nance loses, it's a split decision. In my opinion, this will also yield an appeal of some kind. If, however, crypto achieves its anticipated triumph and Nance's Ripple Coinbase is born, well, I'm afraid that's it. So, we're keeping an eye on the progress of those two court cases. The lawyers on both sides are top-notch, so I have faith that they will present compelling arguments and that the court will reach the right verdict. The most important thing is that, following the proper legal precedent created by our decision in the Ripple case, the vast majority of these assets do not constitute securities, but rather commodities. We will strive to obtain a verdict that will encompass a broader scope in this case, expanding beyond the scope of Ripple and XRP, because these exchanges handle a substantial amount of assets. Regardless, it was that laid the groundwork for what is happening now. I don't understand about staking and everything else. What this final piece from Cointelegraph headlined "Impact of a Bitcoin ETF, Revolutionary Change or Collapsible Dud" will tell us is anybody's guess. Everybody is scared that prices will go down, but we got our ETF. Perhaps this has no significance. Finally, after over a decade of fighting, the cryptoverse got its way. Exercise caution when you desire something. This downside was widely anticipated. It may be a minor setback, but it makes us wonder what the fallout will be. Will exchange-traded funds, ETFs, successfully woo investors who lost money during the last crypto winter? The prevailing belief is that these individuals will never put their money into cryptocurrency again after being burned. People saying, "Oh, I don't want any of these tech companies," is something that happened during the dot-com bubble. I was burned once before. Actually, if that worth becomes widely recognized, everyone will be holding tech businesses and investing in them. Those who aren't will be severely punished. No one will quit investing in space foolishness just because there was a coin and there aren't many of them. What happens if cryptocurrency exchange-traded funds, ETFs, developed by firms like BlackRock and Fidelity, go unnoticed? This is already generating a lot of volume. As soon as the fear of missing out, FOMO, wears off, I anticipate that it will annoy Peter somewhat. The high fees associated with futures and grayscale products have naturally caused investors to rebalance their portfolios. However, demand will exist in that area. To begin with, major players like BlackRock and Fidelity are well aware of the demand. They would not have invested here if they hadn't been certain that it would continue to rise over time, thanks in part to initiatives like these that have brought crypto into the mainstream. I don't know what to tell you if that's a failure, buddy. Only gold out of all the ETFs is showing more action right now. Listen, Bitcoin just surpassed silver to become the second most important commodity ETF in the world today. Everything is running smoothly, and it even claims that this is improving crypto's reputation, which I agree with. More and more people are beginning to see cryptocurrency for what it is, an asset class. Also, I keep thinking about those tech businesses. We were delayed. However, as our success grew, we became more at ease with the fact that this is truly state-of-the-art. People will eventually get a handle on it once it becomes commonplace, and then things will take off. Here we will observe the identical pattern. Here is the final quote from the article. The massive barrier that has been lifted has rendered the ETF as a readily investable commodity, similar to anything else, and most people are unable to grasp this. A large number of individuals are interested in using their brokerage accounts to invest. With their retirement funds, they intend to make investments. Charles Schwab, JP Morgan, BlackRock, and the like are their trusted investment advisors. Although I am well aware that crypto purists are vehemently opposed to this, I do believe it to be a useful tool when applied appropriately. Large quantities of money should not always be kept in one's own possession. Nobody seems to care that you're vulnerable to things like house invasions, robberies, and key loss. This occurs frequently. A lot of individuals won't play this game unless they can reassure BlackRock and Charles Schwab that their money will be safe. Additionally, that in no way precludes the usage of cryptocurrencies in your day-to-day operations. You can keep a manageable amount for personal use, but many people won't go into this market for financial purposes unless they have an exchange-traded fund, ETF. Never tainted. The goal is to attract new investors and users, regardless of how a crypto fan feels about the industry. In the long run, I have a clear idea of what ETFs will do. Post your comments below and tell me what you think. Again, I ask that you like and subscribe. Goodbye for now.